So a lot of people now are analyzing, stocks using traditional metrics. And they're saying, well, the S&P now is, coming down from 23 times earnings to 19 times earnings. And, historically, that sounds all well and good. But, that assumes the earnings are static. Because of the oil and inflation, you're going to see a demand destruction. And, the E could come cratering down. So the P, is going to follow. So I don't think you can, look at these balance sheets and, all of this stuff. The market is a forward-looking mechanism. And, sometimes I say the market is just literally a force of nature. It's a momentum. So when the market had the Fed at its back, it was just a momentum that way. And now the Fed's in its face, and now it just will pick up steam that way. And, you'll go past all these metrics. Well, it's got so much cash in the bank. It's got this, it's, whatever. It all looks great on a traditional thing, but, the markets can throw the baby out with the bathwater. They can, get irrational on the way up and irrational on the way down. And I think there's a real danger of, some serious irrationality kicking in when, people start throwing in the towel. Now, the two stocks that, really been holding up throughout this whole thing, Microsoft, Google, and Apple. And so, these are, the three stocks that I think, are going to really give us an insight to how this may play out. So you can see how well, Apple, has adhered to this uptrend line. And so we still see this double top and this head and shoulders. And now, we have to see how it plays around this 270 level. I'm sorry, this is Microsoft. 270 is really where, it keeps bouncing off of. And, if we start coming back here, I suspect that we could start, going through this. Tesla's already started breaking its long-term trend line. Netflix and Facebook and, all of these stocks have gone through that a long time ago. So these are the, two real holdouts. And by virtue of their market cap, they're still kind of holding the indexes together. But, if they start letting go, then, you're just going to see the indexes start misfiring also. So you can see that we haven't really quite touched this downtrend line in Apple, about 150. So to me, we may get the first bounce off that. But, any break of that downtrend line is going to open up, another chasm. So 150 in Apple, 270 in Microsoft. I think Google's probably the strongest, but, it's already starting to show signs of, wear and tear. This to me is the, looking like the strongest stock. But, it still looks pretty strong. But I think that it will also be subject to the gravitational pull. So you can see we've been, hugging above this trend line, and, buried in all of this stuff is kind of a funky looking, head and shoulders. This would be the last one I would short, but it, looks like everything else, it's very vulnerable. So again, I think, the Fed, even though we know these things are typically catalysts just to send things where they're going to go. Now, these second tier things, Facebook is just broken. I mean, no signs of, anything. I think the shift of their business model, to my mind, just signaled that their core business is mature and tiring. And, I don't think it's going to be a quick pivot to something else. So it's kind of this funky head and shoulders. And to my mind, there's still a lot left, even though it's cratered. So you've kind of come to this first level. You had no respect for that support. And now, it could come all the way back to 120. So but I think, in and of itself, just, an institutional stock, many sovereign wealth funds own this. The fact that this kind of happened overnight should really be a wake-up call.
See, yeah, 45, it's 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there.
So you can see how it's going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.